Good morning, everyone. I hope you're all having a great day so far. Welcome to my channel if you're new, and welcome back if you are not. Well, SPAC stocks are all the rage right now, and I wanted to do a video on the latest one that is catching fire. It's called Opendoor, and they are reverse merging with social capital Sophia, and this deal is sponsored by the legendary investor Chamath Palihapitiya himself. So it's attracting a lot of attention, and he thinks this is his next 10xer idea. In this video, I'm going to go over what they do and if I think they're a good buy right now. Now, if you are new to my channel, I like to find short-term and long-term trading and investing opportunities in typically lower-priced stocks. I like to find undervalued, underappreciated stocks with high growth potential and talk about all other things finance-related as well. Now, if that's something that interests you, please subscribe to my channel so you don't miss any future trading and investing ideas. Also, I am not a financial advisor, so please do all of your own research before buying any of these stocks. Opendoor Labs on Tuesday said they plan to go public as they have agreed to merge with SPAC or blank check company Social Capital Hedosphilia Holdings Corporation under the ticker symbol IPOB. This deal will value Opendoor at $4.8 billion and will provide them with more than $1 billion in liquidity. This deal includes $100 million from Social Capital founder Chamath Palihapitiya, who also took Virgin Galactic Holdings public, ticker symbol SPCE, the same way. Now, here's part of the clip of Chamath explaining what exactly you're investing in when you buy Opendoor and his vision on how big this could become. And I'll link the full interview in the description below if you want to see it.
Guys, the news is that IPOB is merging with Opendoor, and Opendoor will be going public. This is the largest online consumer real estate business in the United States. It's doing something really incredible. And what I wanted to do was take an opportunity to give the viewers a sort of behind-the-scenes look at how we decided to do this investment. It's more than $1 billion. It includes ourselves as well as a bunch of very well-known other co-investors. And so I think it's important first, I wanted to just take a step back for you and talk about what this whole craze around SPACs, but specifically what my goals were with IPO 2.0. The reality is that a lot of investors are really shut out from the growth that exists in Silicon Valley and tech businesses. But what I'm trying to do is really democratize that access, find these iconic businesses, help them get public, enable them to grow for long periods of time, and really help build a legacy business, because if we as investors can be a part of that, then we can basically share in those gains as well. So the setup is that. And so what we did was we started to look across a whole bunch of industries, and one industry that jumped off the page was consumer real estate. And the reality is that in the last 20 years, but even specifically in the last 6 months, everything that could be bought and sold online has moved online except that. And real estate is interesting because this is a category that touches every single American. This is the pillar of the American dream. 68% of Americans own a home. 32% probably want to at some point. 5 million homes are sold every year. This is the largest undisrupted market in the US. It's $1.6 trillion. But despite that, it's completely fragmented. It's low convenience. It's low trust. It's low NPS. And a third of the people in the marketplace actually only do it part-time. And so this is where we found Opendoor. And what they have done is something really incredible. And we think that they are building what we love to call a virtuous cycle. So how does this work? You as a consumer can now go to opendoor.com, and within 24 hours, they will give you an all-cash offer for your home. And if you choose to sell within 3 days, you can sell your home. It's a really incredible experience, and so you can start to understand how they can build a really powerful competitive moat. Because the more offers that they're able to make, the more homes that they will buy and sell, which means the more markets they'll dominate, which means the more value-added services that they can automate online. For example, mortgages, title, escrow, all these things where you used to have hundreds of pages of documents they can streamline through a mobile app. It also allows them to work with banking partners to secure large pools of capital at cheaper and cheaper rates. They can pass all these savings on to you, and all of that drives more demand to the business. Now, That's what got us really excited about the company. But then we took a step back and sort of Buffett and Munger language asked, what's our margin of safety? What can we rely on that allow online buying of homes to grow relatively unimpeded for a long time? And there are 5 really important trends that I think people need to understand. The first is that coming out of the global financial crisis, we've seen a massive underbuilding of housing supply. This is creating large housing affordability issues in major cities, and people are moving. The second is that because of the tax situation in America, the federal government eliminating the state and local tax deduction, state budgets in peril, taxes are going up, people are moving. The third, because of coronavirus, you can now work from home. Many people can work from anywhere, so they are optimizing for quality of life and they're moving. The fourth, you have 75 million Americans, digitally native millennials, who want to do everything online. They're starting to have families, they're looking for homes, and now they're stepping into the housing market. And then fifth, and probably the biggest accelerant on all of this is, as of a few weeks ago, the Federal Reserve basically told us that they're going to keep interest rates effectively at zero for a very long time. And we think that's going to drive an enormous amount of home ownership and the velocity. So when you put these things together, there's a really important trend that's happening in America, which is that the huge populous states like New Jersey, New York, and California are stagnating and starting to lose people. And these younger, cheaper, more dynamic cities are gaining enormous share. And these are the markets where Opendoor has already launched and is achieving scale. And so this is a business that we think is now very much proven and ready for prime time. They have 70% of the market, so these guys are the dominant leader, almost 4.5 times bigger than their next competitor. Last year alone, they did $4.7 billion of revenue. And 2023, these guys will do almost $10 billion of revenue. If you take the playbook that they have and you just apply it to the markets in which they can expand in the US, at 4% share, this is a business that will do $50 billion of revenue. And it's a merger that really creates an opportunity for investors. We priced this deal at 1 times 2019 revenue, but it's also an opportunity for Opendoor to raise the money they need, fortify their balance sheet, and really create more value and scale. So the last thing I'll say is I want to take a step back and just remind folks of, the times that I've come on, I've really tried to find asymmetric upside opportunities and present them to you, Andrew and Joe, and the rest of the viewers. And I really believe in this business. This to me feels like Bitcoin in 2012, Amazon in 15, Tesla in 16, Virgin last year. This is an enormous bet for me, and I think that Opendoor is going to build a huge, huge business.
So basically, Opendoor is trying to automate the buying and selling of homes. And from what the early data suggests, customers seem to really like this service. Now, Opendoor is not the only company trying to do this. Redfin and Zillow also have a similar service that they're pushing, so this could be the future of home buying and selling. Now, I've bought and sold 5 houses in my life, and I really don't care for the process. It's stressful, and I've learned the hard way that the quality of an agent is a big factor in how much stress the transaction has. But how do you know for certain which agents are the best, especially when everybody recommends theirs as the best? And when you factor in the old phone book-sized stack of papers you have to sign when buying and selling a house, the process can be quite intimidating. So this industry is ripe for disruption as far as I'm concerned. Now, Opendoor claims they can get a deal done in as little as 3 days, so I think this aspect is great because twice I was stuck in a situation where I had to make double payments because the selling of my old home after I purchased a new one took much longer than anticipated. Now, it seems like the margins on this kind of business will be rather thin when you consider everything, but I would expect them to get better with the more transactions they get under their belt. Now, on a side note, if you do have a mortgage, I would recommend the Velocity banking system on how to pay it off fast. I've used it twice, and I wish I would have known about it when I was younger. It would have made a big difference in my overall net worth if I did. Now, I made a video about it, and I'll link that in the description as well if you want to watch it. But there are also a lot of other YouTubers that have made videos on it, so there's a lot of information out there for you. Now, another question I have is, since money is so cheap right now, how will higher interest rates affect this business? I can't imagine it would help, so that's something that needs to be watched carefully if you invest in this company. Another concern I have is, since the business model does a lot of house flipping, the risk would be quite substantial if some of the markets in the cities that they buy in get soft and they get stuck with some of these homes or have to sell them at a loss. Now, that doesn't happen very often in real estate, but it's definitely a risk. Okay, right here we have the daily chart of IPOB. And as we can see, yesterday they were up huge on over 63 million shares traded. Today is having an inside day, so that's actually bullish that it's consolidating at that higher level. Now, I haven't bought any yet, but I think where I want to be a buyer is at this 8-period exponential moving average, or this white line on the chart. I think it's going to find support there. Hopefully, we get a day where it comes down to around 14.50 or so, and I can buy in a little bit cheaper. But as we can see, it's already been finding support at that white line this whole move up this last week or so. And that is quite typical on a fast uptrending stock. If we go to DPHC, but this has been one of the better SPAC plays going on right now. This is Lordstown Motors, which Workhorse has a small stake in this company. But I did a video on this one when it first popped up way back in August, but I never bought any. I think I bought it. Oops, I think I did the video right about here. And I said I wanted to be a buyer of the stock when it fell down to this purple line, this 21-period exponential moving average, but it never fell down that far. It found support at the 8-period exponential, the white line on the chart. If I move it forward just a little bit, we can see that. Maybe. There we go. That would have been the first buy. I was kind of hoping, I got a little greedy. I was kind of hoping it was going to come down to that 21-period moving average, but these things have been hot. I probably should have known better. And if we follow this trend all the way out, we can see that it was finding support at it the whole time. Here's several more days in a row. It broke it a couple days later, but it popped right back above it. If I'm in a stock and I'm trying to capture a big move to the upside, if it breaks that white line, I usually don't get too worried unless it breaks it really big, or when it does break it, if it hangs below it for a few days, then I will consider getting out if I'm just in it for the fast move. But the next day it popped right back over that white line and just kept trucking right up. And if we move it all the way to the current day, we can see it broke it right here, popped right back above it, and continued up. So it is still above that 8-period exponential moving average, and these SPAC stocks are still hot. So I would expect IPOB to potentially follow that same pattern. But like I said, I don't own it yet, but I might buy it if it comes down to this level. And actually, I probably will take at least a small position because these things are red hot. And you never know how long these things are going to go on for, so you want to take advantage of them when they are in play. But the other social capital blank check stock right now is IPOC. Now, this one hasn't taken off yet. I mean, it's had a pretty good move in these last 8 or 10 days. It's gone from the mid-10 range to 12, which is actually a pretty good move. But as far as I know, they haven't announced any merger just yet. So this one, I am strongly considering taking a small position right now. And once something gets announced, piling in a little heavier. Now, I think Chamath probably has some tricks up his sleeve planned for this one, and I would like to get in a little early, but I haven't bought in just yet. But I'm keeping a close eye on IPOC, and if anything happens with this one, I will make a video, and I'll try to get it out super quick, because these things move so fast, time is of the essence. But that is all I have for you guys today. I'll go back to IPOB real quick. But like I said, I think I want to be a buyer when it comes down to this white line here. And if I do enter it, I will let you know in a video. Or if something comes out on IPOC, I will definitely let you know about that one in a video as well. Please like this video if you enjoyed it. Definitely do that for the YouTube algorithm. Subscribe to my channel if you haven't already. Thank you so much for watching my video all the way to the end. And until next time, take care, everybody.